Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Monday, December 8th. A little bit of a wishy-washy day in some of these markets. We'll just get things started as we usually do with that corn market. We've got March futures pulled up here, and as you can see, kind of a ho-hum day as we saw futures again reject the 200-day moving average for about the 7th consecutive session. Brought us back near that 20-day moving average, which we've been treading along for the better part of the last 2 weeks as well. So a little bit of a disappointing price action, but no serious technical damage was inflicted just yet. We do have a WASDE report tomorrow morning, so that could potentially move the needle one way or the other. Significant support on the top end remains at 450 area, and on the low end you can see trendline support, the 50-day moving average going to be right there near 440. So really, if you zoom out and you take out just a handful of these sessions, that's really where we've been trading at for the better part of the last month and a half. 440 on the downside, 450 on the upside. Wouldn't be surprised to see that range remain intact. Consecutive closes out above or below, and potentially you get a new trend that starts to develop. Now over to the soybean market, that's where all the action has been for the last couple of days. We've had a serious breakdown and a largely reported on head and shoulders pattern, which is played out nearly perfectly as far as the textbook definition of a head and shoulders pattern goes. Had the breakdown on Friday, and that led to some accelerated selling pressure in today's trade, which brought January futures back below that psychologically and technically significant $11 level, coming into the original breakout point, which was here on October 27th. You also have the 50-day moving average there. We've outlined this in the morning reports for the past couple of weeks, that if we break below and the head and shoulders starts to confirm, the mid-1080s is the next downside target. If that cannot hold, then you're looking at this gap from October 27th, and that comes in about another 20 cents below that mid-1080 level. So those are the potential downside levels to take a look at. I think that this would hold on the first test, barring any surprise announcement from the USDA tomorrow. I think that the breakout points are probably going to act as pretty good support going forward, so long as China continues to show up in purchases. Now, hopefully we can get them to show up more frequently and in bigger quantities. That would certainly help things going forward. Now, jumping over to the wheat market, it has been a complete stick in the mud, as you can see here, trading on the 50-day moving average yet again through today's trade, the 11th consecutive day of doing so. But we are still holding support, 528 to 530, a little bit of a gap from October 27th from a risk-reward standpoint. It's a quiet market, not really anything to get excited about, but if you want to take a shot at the long side, the risk is fairly well defined. A break and close below here, rip the Band-Aid off and probably look to reset for another opportunity. If you're more of the type of trader that likes to buy on strength, you want to see obviously a closeout above the top end of the recent range, which happens to coincide with the 20 and 100-day moving averages near 544. Now over on the livestock side of things, it has been an eventful last couple of weeks as the market has found its way back to the 50% retracement, which is basically a fancy way of saying the middle of the trading range from these October highs to the November lows. And for the February live cattle futures, that comes in right near 227.5. That's where we started to peter out in today's trade, and we've talked about this really for the last couple of videos that we've done, that we really wouldn't be surprised to see the market settle into a little bit of a range and start to see some consolidation and volatility and in price. There's a lot of overhead resistance at this 50 and 100-day moving average, as you can see. That also represents a gap from October 27th. That comes in 230 to about 233. So that's a very wide pocket, but I think there's a lot of significant price points in that area, and you can look at that all the way back to July. This was resistance, the breakout point, it was support in September, and then the eventual breakdown point. So a lot of interaction between buyers and sellers in that area, I think, will probably act as pretty stiff resistance on the first test. Now over on the feeder cattle side of things, similar setup. Got to the 50% retracement. You've got the 50-day moving average, the red line, the 100-day moving average, the blue line, acting as pretty good resistance here. Market pulled back today. As with live cattle, I really wouldn't be surprised to see this market settle and nestle into a little bit of a range as well, albeit these might be wide ranges that we settle into for feeder cattle. If we do get out above resistance here, these moving averages and the 50% retracement, you're going to be working into that gap that was left from October 27th. The top end of that gap really doesn't come in until 348. So if we, even though I think we probably settle into a range here, you need to be cognizant if we do close out above resistance, there's air, about $8 of air from 340 to 348, so be sure to manage your risk appropriately as usual. Now, we will wrap things up with the lean hog market. Lean hogs, very constructive price action over the last several sessions, got back to the 50-day moving average. Yes, on Friday's trade and in today's session, weren't really able to get out above there with any conviction today, but the technicals are still looking pretty decent, trying to carve out a low. This resistance level also coincides with these highs from November 11th. If we can get out above there, I really wouldn't be surprised to see some accelerated buying pressure take us up towards 88.80. That would be the next upside objective. A failure here, and you potentially go refill this gap from last week. So that's what we're looking at to start this week's trade. If you have any questions at all, don't hesitate to reach out. If you're looking for WASDE updates and estimates, head over to bluelionfutures.com. You can find all the information there, or call our trade desk. We are always ready, willing, and able to help. We will see you on Wednesday. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.